Welcome back to Luxo-Life, your go-to channel for all things finance and lifestyle. Today's video is all about staying on target even when the economy is tough. With inflation on the rise, it's easy to feel overwhelmed and uncertain about investing. But don't worry, we've got you covered. From Warren Buffett's annual letters to Michael Burry's latest Big Short, we'll take a closer look at what the experts are saying about navigating a period of high inflation. Because let's face it, inflation is a hot topic right now and it's affecting us all. So grab a pen and paper, sit back, and get ready to learn the 5 ways to stay on target during these tough economic times. Whether you're a seasoned investor or just starting out, we've got some valuable insights and strategies that will help you stay ahead of the game. Let's jump right into it. Investing is all about committing money to an investment and getting more money back in the future. But when we factor in inflation, it's more helpful to think about investing as giving up buying power now to have more buying power in the future. It's like giving up the ability to buy 100 meatball subs today in the hopes of buying 150 in the future. This concept is crucial because it highlights the real return on your investment. Even if you make a 20% gain on paper over a few years, if inflation is rampant, your real return could be zero. You might sell your investment and make a profit, but because the value of money has decreased, you won't be able to buy more than you could before. In other words, you've had no gain in purchasing power. Warren Buffett discussed this issue back in 1979 when the inflation rate was 11%. He explained that the inflation rate, coupled with individual tax rates, can determine whether an investor's internal operating performance produces successful investment results or not. Under inflationary circumstances, a corporation earning 20% on capital may yield a negative real return for its owners, which may reduce an investor's purchasing power. In 1980, Buffett again used an analogy, saying that the typical tax-paying investor is currently on a down escalator whose speed has been sped up to the point where his progress upward is zero. Inflation is not only tough on investors, but it's also a crappy time for businesses. It eats away at their purchasing power, and they're forced to make tough decisions about raising prices or reducing profits. What kind of companies thrive even during moments of high inflation? According to Buffett, favored businesses have 2 critical characteristics. First off, even when demand is stagnant and capacity isn't being used to its full potential, they can easily and swiftly raise prices. Second, they require little extra capital expenditure to accommodate significant dollar volume increases in business that are frequently driven more by inflation than by genuine growth. Overall, inflation can make investing more challenging, but understanding its effects can help you make smarter investment decisions. So, if you'd like to learn more about how to stay focused, even when the economy is tough, Warren Buffett suggests 3 ways to do so that he observed from several companies that he has invested to. For number 3, we have an ability to increase prices and cop no consequences. Companies can often increase prices without facing consequences, especially if they have a moat that protects them from competition. For example, let's say you're running a small production company and have invested in training your employees to use expensive software like Photoshop, Premiere Pro, and After Effects. Suddenly, that software provider increases its subscription fee, which will result in higher costs for your business. If you switch to a cheaper alternative, you'll have to spend money to train your employees on the new software and face downtime while switching everyone over. Additionally, your clients may not want to switch to a different platform either, which would make it difficult to complete their projects. So, you're stuck with the higher costs. Another example of companies raising prices with no consequences is Apple. Due to its strong brand and ecosystem, Apple can increase the prices of its products and services each year, and customers will continue to buy them. In 2012, the average selling price of an iPhone was just over $600, and by the end of 2018, it was almost $800. Apple also offers a variety of add-on subscriptions, such as Apple Care, iCloud, and Apple Music, which customers feel pressured to purchase. The bottom line is that customers are willing to pay more for Apple products because of the brand and ecosystem, and there's no escaping it. Number 2. A business model should enable profitability, year in and year out. If you want your business to thrive even in inflationary times, It's not just about having a strong moat or the ability to increase prices without consequences. It's also about having a business model that allows you to make a profit year after year, even when facing economic challenges. To do this, a company needs a scalable business strategy that can handle significant growth in revenue with only little additional capital expenditures. In other words, by doing more business, a company should be able to make the same amount of profit or more while maintaining lower margins. One example of a company with a scalable business model is Facebook. They can easily increase the frequency of sponsored posts or other adverts if they are unable to pass on the increased cost to their customers. This means you may see 3 ads while scrolling through your Instagram feed instead of just 2. This simple adjustment helps them to maintain profitability even in times of inflation. Another key factor in a profitable business model is offering a product or service that customers are willing to pay for. This requires a solid understanding of the target market and providing excellent customer service. Companies that offer unique products or services that solve a problem or fulfill a need are likely to be successful in the long run. The razor and blade model is another example of a profitable business model. The low-cost razor is often given away for free, and customers have to buy the more expensive blades to keep using it. This creates recurring revenue and helps the company maintain profitability year after year. It's important to note that not all businesses have a scalable business model. For instance, a shipbuilding company may struggle to increase the number of ships it produces each year due to the high cost and slow process. However, companies with a scalable business model, like Facebook, can quickly and easily increase their business volume, even during inflationary times. Moreover, having a business model that enables profitability year in and year out is essential for long-term success. Scalability, unique products or services, and excellent customer service are key components of a profitable business model. By focusing on these factors, businesses can maintain profitability and thrive even during challenging economic times. Now, Warren Buffett's advice during times of inflation highlights the importance of investing in oneself to protect against the invisible tax of inflation. But in addition to personal growth, the key to building wealth, and the most important out of all of them, lies in number 1, which is investing in companies with a sustainable competitive advantage. A sustainable competitive advantage is what sets a company apart from its competitors and enables it to maintain its market position. This advantage can come from various sources, such as proprietary technology, intellectual property, economies of scale, or a unique brand. It's what allows a company to charge higher prices, maintain market share, and fend off competitors. For example, Coca-Cola's secret recipe and branding are a sustainable competitive advantage that has kept the company at the forefront of the soft drink industry for over a century. Google's search algorithm and brand recognition are also sustainable competitive advantages that have propelled the company to become the most dominant search engine on the internet. Investing in companies with a sustainable competitive advantage is a proven strategy for building wealth over the long term. As these companies continue to dominate their respective industries, their earnings and cash flows grow, which can lead to substantial returns for investors. Additionally, these companies are less susceptible to economic downturns, as they have a strong market position and a loyal customer base. In addition to a sustainable competitive advantage, a profitable business model and the ability to raise prices without consequences are also essential factors for long-term business success. The razor and blade model and subscription-based model are examples of business models that create recurring revenue streams, while unique products or services that solve a problem or fulfill a need can drive customer demand. To sum up, Buffett's advice to invest in oneself during times of inflation is an excellent way to protect against currency decline. However, the key to building long-term wealth lies in investing in companies with a sustainable competitive advantage, a profitable business model, and the ability to raise prices without consequences. By doing so, investors can create a solid financial foundation that can withstand economic challenges and generate substantial returns over time. And as we wrap up, it can be tough to do well as a stock market investor when inflation keeps ramping up. Your real return can end up being zero. So what's the solution? Invest in yourself, so that your ability to purchase things doesn't decrease. Upskill yourself and earn more money. Improve your own worth. By preserving your own purchasing power, you'll be in a fantastic position to make investments whenever inflation levels off. You'll likely even be able to snap up some cheap stocks as well, and it all comes back down to the competitive advantage. During moments of inflation, your company will succeed if it has a moat and is able to raise prices without experiencing unfavorable effects. So what's the call to action? Start becoming the best investment you'll ever have for yourself. Learn new skills, take on new challenges, and build up your earning power. It'll pay off in the long run, both personally and financially. And if you're interested in learning more about investing in finance, be sure to subscribe to our channel, Luxo-Life. Hit the like button if you found this video helpful, and don't forget to leave a comment down below with your thoughts or questions. Thanks for tuning in, and we'll see you in the next video.